It was all about the banks today. The financials led the market rally and could potentially lead stocks higher tomorrow. Late today, in an indication of how much healthier the financial system has become, the Federal Reserve gave the biggest U.S. banks the green light to use their extra capital for stock buybacks and more dividends. That's good news for investors looking for extra income. Kayla Tausche has more now on the final results of the central bank's so-called stress test.
For the first time since the financial crisis, the Federal Reserve has not rejected any of the capital plans submitted by the 34 banks getting stress tested, finding the companies to be sufficiently capitalized to return money to shareholders while weathering a recession. The Fed did find risk management issues at Capital One. Capital One's required to resubmit its plan within 6 months or risk its shareholder payouts getting frozen. The company's levels exceeded the Fed's thresholds, but it did once already adjust its shareholder returns before the stress test results were first out last Thursday. American Express did the same as one of its capital levels was below the Fed's threshold. Senior Fed officials said the rapid growth in credit card balances, an uptick in delinquencies, and a stress test that included more severe losses for credit cards all played a role in this year's assessment. Amex cleared the bar by resubmitting its capital plan. Senior Fed officials said, unlike years past, getting close to the threshold won't be met with a supervisory penalty. And to that end, banks have requested substantially increased shareholder payouts. These officials say banks will be getting close to returning 100% of their net revenues to shareholders. At this time, that would also be a post-financial crisis first. For Nightly Business Report, I'm Kayla Tausche in Washington.